inflation is dropping, but does that mean that home prices are going to fall? I mean, looking back, we saw home price growth peak in February. Both average and median price growth slowed in April. Average home prices can often be misleading due to the extremes, like Russ and Wilson's purchase of a $25 million home this month. So let's stick with the median. Month over month, looking back, median price growth started out flat in January, yet low inventory and strong pending home sales provided a strong close to list of 102%, kicking off the year. In February, prices rose 6.5% in 1 month alone, as active listings stayed depressingly low due to an equal number of under contracts to new listings, pushing that close to list now up to 105%. March saw a swell of much needed inventory, if you can call 6,000 homes a swell, giving buyers a few more choices but no extra days. Days in the MLS stayed at 4, while the close to list increased again to 106.5%, even while median home prices softened to 4.8% month over month. April's data reflected a slowing median price home growth again, as it increased only 3.81% from last month, with almost 7,000 homes hitting the market. Yet, the close to list continued to increase to 107%. So what's happening? As more inventory comes online, you would expect days in the MLS to go up, close to list to go down, and appreciation to slow. In fact, those adjustments would move us slowly towards a more balanced market. However, buyers are still going out fierce, getting homes under contract in one weekend and paying over asking, even if they're the only offer. They don't know. They don't know that the buyer pool is relaxing, and they're still afraid to miss out on their piece of the American dream, their hedge against inflation, their plan for multi-generational wealth. Rising interest rates will slow demand, as will rising home prices, as buyers have to make hard choices. Some buyers will even be priced out and forced to rent, while others will migrate to lower-priced metros. Yet, Denver shows no shortage of buyers who can't afford to be here and who are willing to compete for and finance the limited properties available. 6,881 new homes came on the market in April. 5,725 quickly went under contract. This during a month when interest rates went up by a full 0.5% and cash buyers dropped to 18.7% of the market. On a broader economic level, similar tugs of war are going on with consumer sentiment, hitting its lowest level since 2011. Yet, consumer spending is still up 1.1%. This is in the face of an 8.5 CPI and a 6.6% PCE inflation index. Higher costs are slowing some people down, but not all, as consumers have been flush with cash for the last 2 years, winning big in the stock market and in housing. Home prices are expected to moderate as more inventory comes online. Zillow is currently forecasting a slightly lower 14.9% appreciation for the next 12 months. Fannie Mae is expecting appreciation to decelerate through 2022 and all the way through 2023, landing the fourth quarter of 2023 at 3.2%. CoreLogic is calling for a slowdown appreciation of 17% for 2022. Much of this appreciation deceleration is dependent on inventory coming back to levels seen pre-pandemic. We need to watch this. We need to watch for inventory to increase year over year to get any relief. DMAR's 11 counties had 3,204 active homes for sale just this last month in April 2022. That's a 23.5% increase from 2021's 2,600 homes for sale. This is a good move and in the right direction. However, we're still down. We're still down 53% from 2020's 6,800 homes and 54% from 2019's 7,000 homes for sale. Considering we closed 4,900 homes in April, we are well short of the 29,000 homes we would need for a balanced market, last seen in 2011. This market, the kind of market we have seen for the last 2 years, can exhaust and scare anyone. As headlines remind us of rising prices and unaffordability, would-be homeowners are left grappling with if now makes sense. Our jobs as real estate and mortgage professionals is to tell the stories, their stories, to show them that there is a path to home ownership, even in markets like this. Did you know that pre-pandemic, having a net wealth of $1.2 million put you in the top 10% in the country? If you're 18 to 24 years old, $50,000 in net wealth puts you there. 2021 saw over $3.2 trillion in home equity growth. That's opportunity. April alone saw 3.8% month over month and 19% year over year increase in Denver Metro's median price growth. In contrast, Bitcoin dropped 18% in April, NASDAQ down 13%, S&P down 9%. Real estate truly is the path to building long-term financial wealth, diversity, and stability. Well, until next time, that's a wrap for this month's Market Trends Update. It's my pleasure to keep you updated. Nicole, Rueth, the Rueth team of Fairway Mortgage.